Well, let me explain trading to you, Scott.
Okay.
Trading as opposed to core positions, you put levels in, at least I do, to control your risk.
Okay.
John does this, I know. Others do it
Right.
who are astute traders. So I had a trade on. So I had to stop on that trade because I wasn't convinced of the fundamentals at a level where I thought I was done losing money. I didn't want to lose it. Every trade I put on typically has a stop. That's a trade. That's not an investment. In an investment, if a stock goes down dramatically, I re-underwrite the fundamentals to make sure that I'm okay. I don't have any interest nor the time to do that in trades. So that's why, and the operative word you said when you described this was long-term trade. Long-term trade can be a short-term trade if it hits my stops. So I don't have any ego about this. I could be wrong. I was wrong. Took the emotion out, used a stop. That's why I'm out.
It was a very.
It's not complicated at all.
No, but I guess I wanted to know why you would call something a long-term trade, but then have such a tight stop on a $400 stock that at the end of the day only needed 2 to 2.5% of downside to hit what was a very tight stop in something that you said was a long-term trade. I just wanted to make sure we got to the full bottom of how you were thinking about it.
The stock trade, okay. The stock got up to 424. Okay, that's 5% down. How much do you want me to put in there to protect my downside?
Well, I don't want you to do anything.
Should I suffer 10% loss on a trade?
I don't want you to
do
anything.
Well, apparently you do. I've got my discipline, and I move my stops depending upon where the stock is. That's what good traders do.
You're
and that's
a good trader.
What I did. So I moved my stop, limit my losses. I took a loss on it because I did buy more. If I kept with the original position, I'd be fine. My stop would have been moved up anyway because then I'd want to make money on the trade. So that's just how you do it. It's just good risk management, and that's what I try to do.
No doubt.
Keeps me solvent.
No doubt. Obvious good risk management. I just wanted to make. Why are you laughing, Doc? I just wanted to make sure I understood.
Doc, do you do the same thing? Doc, do you do that?
Yes, sir. Yep, I do, Steve.
Okay, so what's
the part
funny,
that
Doc?
Steve's dead right about? Well, no, Steve is managing risk. Bryn, Josh, all of us have to, Joe, we're all focused on managing risk. Some of us do it with options. Obviously, Bryn and Steve and I do it with options. The rest of you use stop orders, I imagine, and so forth. But you always have to make sure you're watching that risk. It was just funny the way you were interacting with Scott.
I guess my impression of it, and if I'm wrong in thinking about it this way, then so be it. I don't care. My impression.
I think, Scott, in fairness, I think what I said was it could be a long trade because Joe was involved in the conversation. He said Steve's not going to own it that long. I said could be a long-term trade.
I understand.
It is a long-term trade. It'll be forever.
I got you. I'm going to finish what I was going to say. My impression would be when somebody is considering something, and I'll use the word now, potentially as a long-term trade, since maybe you weren't as definitive as I made it out to be. If it's potentially a long-term trade in what can be a fairly volatile stock, one that's trading at $400, perhaps usually one would be willing to assume a little more risk rather than such a tight stop to where the stock is now versus what the low was on Thursday, or where it closed on Thursday.
Shouldn't be, Scott.
Hold on, Josh.
You're not wrong.
Hold on, Josh. Josh, please let him answer the question. Go ahead, Weiss.
I don't disagree with you, but I would have used, frankly, a wider stop. But go back to what I said about the market. The market is not going after these stocks that have disappointed. And it's not giving you the bounce that you would typically get in a market, even of 6 months ago. So because of that, if I had, a normal volatility, and I don't associate volatility with risk, I generally associate it with opportunity, but I'm not convinced that it's going to trade higher. So it's not a very expensive stock. It is expensive, and their earnings aren't going to blow it out this year. They've been clear about that. So that's why I did it. So you're absolutely right. That's a tight stop. 5% is a tight stop, but given the market, that's why I used a tight stop.